Okay, welcome everyone. We'll start our first lesson regarding Unit 4, and we're supposed to start our new unit, which is new modules, business taxation. And today lesson will go through LO1. LO1 is about be able to calculate the tax for the self-employment and complete self-assessment tax return. So all our learning outcome is around assessment, and within that we'll go through overall tax return as well. So before starting this module, we'll go through what we're supposed to learn within it, how many learning outcome we have. So all this we'll discuss first before moving forward. Okay, let's please. So Unit 4, Business Taxation. The aim of this unit to give you good understanding about taxation system. Taxation system can be different in different part of the world. So our key focus will be during our lessons to just go through UK tax system. You can look around your own country tax system as well. Maybe the rates are, of course, will be different. Most of the tax system are quite common. Maybe slightly terminology can be different, so we need to be really careful when we deal with the taxations. So we have LO1. Today lesson will go through. We have 4 assessment criteria, explain the nature and the purpose of self-assessment tax, determine the taxable amount, and then complete the self-assessment tax return, and we'll go through the issues as well within the tax. So as accountant, we're supposed to be follow those professional code of ethics. And then we have a learning outcome to be able to calculate the taxable income, corporation tax, and prepare the corporation tax return, which will go through in following lesson. And lesson 3, be able to calculate the VAT return, which will go through the VAT elements, value added tax. In other countries called general sale tax. Today lesson is inductive contents, what we're supposed to be learn and what we're supposed to go through during this lessons. So our key focus will be, can you hear me?
Yeah, I can hear you, sir.
Okay, brilliant. So today lesson will go through expenditure which are allowable in calculating taxable trade profit. So what do you think about profit? Is it all the profit is taxable?
Before arriving at your operating profit, you need to calculate your taxable income, because if you are doing a business, you need to pay tax to tax to the government.
Yes, but like a depreciation, depreciation is a taxable expense?
No, depreciation is not a taxable income.
Depreciation is not a taxable. For suppose if we have a depreciation, you can decide yourself. Depreciation can be 5%, depreciation can be 10%, depreciation can be 20%. Yes.
Yeah.
So when you have a depreciation expense, so your profit will be reduced. Yes.
Yeah.
And because the depreciation is not allowable expense for the tax purpose, you have to add it back.
Yeah, to add the depreciation. Oh, okay, you have to add the depreciation back to get a full proper profit.
And then we can claim capital allowance, which is called first year allowance. If we bought an asset and we can claim the allowance on it, different asset have a different allowance. Those are varies, yes?
Yeah.
So really we need to go through those. It depends, Okay, so that's we need to go through. Then basis of assessment for employment income is a bit, because our learning outcome says to calculate the tax self-employed and complete the self-assessment, but under the contents, we're supposed to be learn employment income as well, yes?
Yeah.
Because when we submit the return, we have to submit the total return, not just one return, just, the self-employment return. Maybe someone is doing just self-employment. Okay, so deduction of self-employment income, we need to look around the mileage rate, we need to look around the property, profit on the business properties, rent, room relief. There are a lot of changes happening in the UK and going to be happen from 1st of April this financial year, which is our year start. Taxable saving income, dividend, exempt investment, which we will discuss. And in UK, we have a regulatory body of HMRC, is Revenue and Custom Excise. So that's, deal with it. Pension and the gift, some allowable, some don't. So we need to look around thoroughly the rules behind them all. Maybe in this lesson we'll give the overall views. Maybe we can't go through everything in very depth, yes? But at least this lesson will give you full, because it's so big, inductive contents. It's very difficult to address everything. But at least, you will be good understanding, and all my slides will allow you to go through a bit as well in detail if you want to. Huh? So plant and machinery allowance, that's called capital allowance. If you buy a machinery, you can, of course, you can claim it, allowance on it. It's not mean what money you paid you can claim in the first year, but the percentage you can claim as a tax relief. Then the trading losses we can carry forward and back forward into up to 5 years. So if you have a loss in last year and this year you have a profit, so you can make adjustment in your tax bill. Okay, then we'll go through the capital and revenue. What is the difference between capital and revenue expenses?
I have studied this 2 years back, but I'm afraid I have forgotten the difference.
No problem. Capital expense, anything which we can capitalize as an asset. If you invest money, like you extend your house, you extend your factory, and the factory value will increase, that's known as capital expenditures.
Okay.
If you new windows, new walls, roofs, everything is new for the factory. This is a capital expenditure. And on this one, you can't really claim, you can't really put in the profit and loss and you reduce your profit. You can claim capital allowance first year through the tax purposes, but you can't put as a capital, as a revenue expense. Revenue expense means day-to-day expense, which we can claim for the tax purposes, like cleaning, like decorations, like painting, like carpet. These are the revenue expenses which we can claim. Other we can't claim. We'll go through a bit UK tax system, differentiate between the tax avoidance and tax avoidance. Do we know what is the difference between them?
Tax avoidance, tax evasion is illegal, but tax avoidance is not illegal. That is, if you are paying for charities, then charities then the government allows you to pay less tax.
Brilliant. That's absolutely fine. Well done. So we need to think about tax planning avoidance. Tax planning is allowed, yes?
Yeah.
So we can plan tax. We can carry forward, brought forward. We can plan this year we'll do this. We can buy asset, and during this year, instead of next year, we can claim the capital allowance. All this is a planning we are allowed. Okay. We'll go through some returns, payment accounts, how we can make adjustment there, and scope of national insurance. We have a NI contribution which goes towards pension, and NHS and various, the contribution, but major purpose of national insurance goes towards your pension calculation. We have different classes. We can cluster as it implies, class 1, class 2, class 4 insurance, which we'll discuss. Then we have late submission penalties. Different penalties can be, which we'll go through few penalties. We need to make sure we submit our tax return well on time. Okay, that's all will be focused to lesson. Any question up to now?
Trading losses that carry forward in current year. I didn't understand if you have a loss and a profit, that adjustment. I didn't understand when you said that.
Okay. If we have a loss this year, yes,
Yeah.
and we have a outstanding liability for tax last year, so we can make adjustment in the last year as well. We can reduce the tax liability for the last year.
But this only if you make a loss.
Yes, if you make a loss. If you don't have a loss mean, of course, your expense is more than the profit.
Okay. Okay.
Like your sales is less than the cost of sales. Yes, which we learn in financial accounting.
Yeah. Okay.
Okay, so that will be really focused. So first I'll quick demonstrate what are the rates we have. On this slide, I copied some rates, but it's very difficult to go through all, in the slide, in the PowerPoint slide. So I'll show you a few. Can you see now? Now?
No, I can't see. I can only see the bullet points of what is going to be taught.
I don't know what's the problem.
Yeah, now I can see.
Okay. So we have in the UK in our financial year, hello?
Yeah, hello?
Yes, can you hear now?
Yeah, I can hear you. Hello? Hello? Hello?
Hello? Hello? Hello?
Yeah, I can hear you now, sir.
Okay, I don't know what's the problem with that. So
Yeah, okay.
next we will go through, I'll show you full list of our rates here. So in the UK, we have rates like in this financial year. Our year start 1st April and finish 31st March.
Okay.
That's our financial year. Our accounting period can be different. Yes?
Yeah,
So
that can be different.
accounting period we can keep 1st December till, or we can say 1st January till 31st March. So it mean I need to be proportion my tax years into 2 years. Yes?
Yeah.
So that's the tax planning. So if you're an accountant or you're a consultant, you're supposed to give advice to individual. Come on, you can start your tax year from this year, this month, so you can save tax, which is allowed. Yes, we not
Yeah.
avoid it. We can transfer into different years so we can save it. So first, are £1 to 34,500. We have a normal rate which is a 20%.
Yeah.
20% are tax. Now we have personal allowance from this year. It used to be 12,500 is a personal allowance, yes?
Yeah. Okay. Okay.
So the income limit is, of course, is 100,000. You can claim personal allowance. If your income is more than 100,000, you can't claim it, yes? So you have to
Yeah.
pay all income your tax. So some people, they stay under this bracket. If they move to the next bracket, they can't claim personal allowance.
Okay.
Any question there?
I don't have any questions, but I have studied F6, so this I know
Oh, really?
everything in this.
Yes, because this is F6, the handouts itself as well. Huh?
Yeah, I studied F6, but only the second time I cleared the F6 paper.
Mm-hmm.
It was very tough.
It is a bit, we need to memorize the rates, especially when you are, if you, for suppose you're doing in India and you're doing this exam. Of course, you can choose international exam or local your tax rates instead of international. Because if it's a better, you choose the Indian tax system instead of UK tax system for ACCA.
Yeah.
You're allowed. So that's is make easy, because of course when we deal GST, general sale tax, and now we are saying value added tax, is a different terminologies and things. Okay, that's all about 12,500 is now is a new tax allowance. Yes. So from this year it will be 12,500. It will be the free limit. Previous year was 11,850. Then the transferable was 11,190. If you're married couple, you can move around allowance as well. Yes, one couple to other couple, they can use the allowance. It's a free tax limit. So that's and if we have a dividend, just a dividend, so we have a rate 7.5% up to 34,500. After this, we have, of course, higher rates, 40%, and then we have additional rates is 45%. But if it's a dividend income, can be lower rates, so some people just take the dividend. Any question?
No, this is clear.
Okay, then second thing we need to be really, I'm not going through all, but we need to think about, especially we need to go through the car allowance or car benefit. First 10,000, we have a 45 pence per mile we can claim. But if it's a more than 10,000, we can claim 25 pence per mile.
Okay.
Then we have an asset, like we earlier said, we can claim capital allowance, yes? So if it's a machinery or special pool, so then we need to go through what's come under special pool. Like cars, some cars on the main pool, some can be special pool, so different allowance we can claim it, yes? Like cars, CO2 levels and 50 grams per kilometer is the emission levels, yes? CO2, so we can claim 100%, otherwise we can claim 18%, 9%, 8%. So these are the different rates, yes? We need to look around the category of assets, which we're not going through in detail, but at least we need a good basic understanding.
For the assignments, can I refer the F6 textbook?
Yes, you can, which is absolutely fine. No harm. You can pick the scenario from it, yes, and you can fill the form, which I'll give you the form as well.
Yeah, but the problem is if I copy it directly in the textbook and someone else has done it, then it'll be plagiarism for me.
Not really. What you can do, if you take the screen print, it won't come plagiarism. Even if the similarities will be high, we can refer it. Why there is a similarity? Because you're using the scenario.
Okay, so if I put the reference as taken from the F6 taxation, then it won't be a problem.
Yes, it's fine, no problem.
Okay, thank you.
We can use professional judgment there. Okay. So next, now value added tax, we have 20%. Yes. Any
Yeah.
VAT we have in, like in India is we call GST, general
Yeah.
sales tax, and we have a threshold 85,000 from this year. It was 83,000 previous year, but now we can, if we want to deregister ourselves on the VAT, input output VAT, input is mean our purchase, output is mean our sales. Yes. Inherent tax we're not going through, but this is coming now under the personal tax as well. If somebody died and the property transferred to, we have to pay tax on it up to certain percentage. Our key focus in our syllabus is a national insurance contribution, class 1. Yes. Class 1 implies it can be different classes. We can cluster as implies. We can, so class 1 implies 1 to 8,424. They don't have to pay NI contribution. If their income is higher than 8,425 pounds, they have to pay 12% NI contribution up to 46. If it is more than 46, any income more than 46, they have to pay only 2% NI contribution.
Why 46,000 they have to pay very less, but between 8,425 and 46 they have to pay more?
Because the reason is, if that will goes more, because the tax rate is increased there. Tax rate is a 50% there.
Oh, okay, yeah.
Tax
Okay.
is a different, NI is a different, yes?
Yeah.
NI goes towards your pension. It means everything you earn, you will give them. So that's why government give the lower, they charge the lower. Yes? Because that's your one way you're saving against your account, yes?
Yeah.
Okay. Then we have a employer contribution. Of course, what employer is paying? Employer is paying 13.8, but employer are allowed some allowance, which is a 3,000 per employees. Yes.
Yeah. Okay.
So they can be exempt up to 3,000. So then we have a class 1, which is called self-employed. It can be class 2 and class 4. Yes. If somebody is a small profit, yes, threshold 6,250, they have to only pay £2.95 per week, NI contribution. If they cluster as a class 4, yes, they registered. So up to 8,000, they don't have to pay. But they don't have to pay any NI contribution, yes?
Okay, okay.
So I can be registered as a class 4, yes? And I don't need to pay any NI contribution up to. But I have to pay if my income will go up, increase from 8,425. I have to pay 9%, then I have to pay 2%, as other implied one as well.
Okay.
Any question?
No, this is completely fine.
And if we have an outstanding rate, we know the base rate. Base rate is a basic interest rate. We have a 0.75 now. But official interest rate, if you have an outstanding tax, 2.5%. If you have a rate of interest unpaid tax is at 3%. Rate of interest overpaid. If we overpaid the tax and HMRC pay us back, they not refund. They should refund with the tax 0.5%. So it's very cleverly being designed. Yes.
Yeah.
So some people can pay more tax, yes, and they can claim interest on it, but they just design it to the base rate, even less than base rate. Yes.
Yeah.
Then we have stamp duties. If you buy a house, if you have a house income, that you can be Yes, so different. If you buy up to £150,000 worth of house, and house is for residential purposes, it's your first house, you don't have to pay any tax on it. If it's more than 150 to 250 is of 2%. If more than 250,000 plus worth of house, you have to pay 5%. Some people, they just play with it in these rules, they just try to reduce the value of the house to pay less stamp duty.
Okay, understood.
Okay, next we move back to now our actual question. So first, our assessment criteria is explain the nature and the purpose of the self-assessment. You wish to claim the business expense. In this section, we will discuss the business expense are allowed when you say self-employed, meant by you doing business as a sole trader or partnership, and you self-employed, you look after your own expenses, you pay your tax, but you should keep the record, and the record need to be up to the 7 years. Yes, HMRC can ask us. NI contribution we have to pay, and we have to pay and I copied the link to be look around the form as well, which we'll go through in the next LO as assessment criteria, which we look. Allowable expense, all revenue expenses are allowable, all revenues, yes?
Yeah.
What is the revenue expense? Is a day-to-day expense, low value expense, yep, that goes in the profit and loss. We can claim it. Like example, Brian started trading but some pre-trade expense we can claim as well, yes? Pre-trade mean the money you have invested in the business, but you not start the trading yet. Yes, like you bought a laptop, your personal laptop you injected into the business, yes? You're using, so that's become a business laptop, and thus you can claim it. So like example, he had 500-pound leaflet printed to advertising his service. In March 2019, the cost of these leaflets is treated as a separate pre-trade deduction from his profit. Yes, first accounting period, and this is because the advertising cost would normally deducted from the trading profit, and had he paid for them after he start the trading, maybe he start and that falls in the previous years. Yes, he done the but actually he start the business next year, but he can claim it. Yes, because it's start trading and they are incurred within the 7 years. Yeah, so we can claim. So we can go back up to 5 year our expense to claim if we want to claim. Okay, what is the difference between revenue and capital expense? As we earlier discussed, capital expense is usually the large amount, and the revenue is day-to-day expense. Yes, capital expense means the expense on the our asset, which is we can claim, but the revenue expenses is a day-to-day. Day-to-day we can claim all, but the capital expense we need to look around the capital allowance. Yes, under which category and what the tax rules we have. Any question?
Oh, this is perfectly clear.
Okay, next we're looking all the revenue expenses are allowed for the tax. So I copied all there, yes, and we can claim it. Like insurance, like advertising, like a repairing, like a, yes?
Yeah.
Okay, then we have assessment criteria 1.2, determine taxable amount and calculate the tax payable given scenario. So we'll go through in this scenario, we can calculate tax. Okay, so we have 17,300 is a profit per account, yes?
Yeah.
Then we pay 12,000 motor vehicle expense, yes? Which was shown in our profit and loss. But estimated 60% of these costs are actually business costs. 60% is a business cost, but 40% is not a business cost. I use for personal use, yes?
Yeah, personal use.
So that's I need to add it back, yes?
Yeah. So when you add it back to 17,300, you get a new taxable profit.
Yes. So that's my taxable profit is 22,100 should be, yes.
Yeah.
And on this one I have to pay the tax. So what I said is a 12,500 no tax from this year. So 12,500 you need to minus, yes.
Yeah, I need to manage.
And then remaining, whatever remaining amount up to 34,500 you have to pay the tax 20%, yes.
Yeah.
So we can calculate 20% tax on it.
Okay.
Any question?
No, this left.
So this is the scenario. We can look around what I'm allowed, yes. Anything for personal use we're not allowed. Other than that we are allowed. Anything related business, anything you like, you paid your course fees, yes, but that course will help you to run your job or perform your duties, so that will be allowable.
For example, if Bernard estimates that only say 75% of these costs are actually business costs, 25% you take that of 12,000.
Yes. If for suppose 17,300 was the profit which we shown in our profit and loss account, yes,
Yeah.
where we put it 12,000 is expense. But that 12,000 is not all related to the business, because out of 12,000, 40% was the personal expense. I use car for my personal activities. So I have to add it back because I deducted first place.
Okay.
So then we can, but in other cases we need to look around the rules. Okay. Taxable income, what is meant by income accessible from the trade, profession, or non-saving income, income from employment, non-saving income, interest received from UK, saving income, dividend income, property income, all come. And the basis of assessment will make adjustment if the any profit or the tax been, because a lot of if you have a saving account and you get the interest on it, normally the bank deduct uh, tax at source, yes, and thus you have to gross it again because you get the net. Any question?
No, this is fine.
Okay, then self-employed, which we earlier said, so we don't need to really go through. Yes, NI, yes, contribution. Then we have a 1.3, compare self-assessment return from the given data. Yes, we're looking some self-returns, self-assessments. Yes.
Yeah.
Okay, self-assessment, you pay £2.50, £2.85, yes, and different rates. We discuss about class 2, class 4, NI contribution, self-assessment, different years, yes, we can start and we can file, we can proportion it. Penalties if we don't pay it or we feel late, we not declare, it can be fine. We've been given one scenario, we'll go through the scenario. We've been given, yes, employment income 39,000, building society interest 9,000. It can be self-employed, yes, or employed. So if we're not on the payroll, we can cluster as a self-employed. Otherwise, we can be clustered. Tax can be deducted at source. Yes. So how much will be now? We have interest, yes, 9,000, and we have how much will be total income are?
Okay, so he has employment income of 39,000, which is more than 35. So to calculate his income tax liability, and also the building society interest is a non-savings thing, so that will also be 20% of that.
Okay, brilliant. So this example is based on the last year tax rate. So employment income was 39,000, yes. That's those state. Then we have a building society interest, yes, 9,000. we have a total income is 48,000. Yes.
Yeah.
And then we have a 11,850. That was the personal allowance previous years. Yes.
Yeah.
And my taxable income 27 from the employment, because I have used my allowance towards employment. Yes.
Yeah.
Then I 9,000. So my income after my personal allowance is 36,150. Yes.
Sorry, I didn't get that.
If we look here, yes. So my employment income, yes.
Yeah, correct.
27,150. Then I have a non-saving income, yes, which I put money in the bank, yes.
Yeah.
9,000. Then my total income is 36, yes.
Yeah, 36,150. Okay.
After claiming my personal allowance, which was authorized, yes.
Yeah.
So now I need to look around because I'm allowed up to 46,350, yes. My normal, yes. So look there, non-saving. How much is the non-saving which is under employment? 27,150, yes.
Yeah.
20% tax.
Yeah, 20% tax.
Yes. So on saving, there is a allowance. If I put money in my saving accounts, I'll get up to 500 is a 0%. Yes.
So I didn't understand that last point.
Okay, because it's my personal allowance 11,850 I have used towards employment. There is a no personal allowance left. Yes.
Yeah, zero.
But saving income also allowed some allowance which is up to 500 is a no tax on it.
Okay, then that automatically becomes zero.
Then remaining I'm paying 20%. Yes.
Yeah.
So that's my 20% on 6,850. Then 27,150 plus 500 plus 6,850 is become 34,500. Yes.
Yeah.
And now my total income was 36,150. Remaining 1,650 I have to pay the tax with which rate? 40%. Yes.
Yeah.
So that's my tax will be 40%. That will be £660. So total my tax liability will be 7,460.
Yeah. Okay. I understood the full basis, but I think I need to work out sums in order to get the full understanding.
Okay, no problem. If you look here, so first we put it state, employment income, yes.
Yeah.
Then I minus under employment income, my personal allowance is 11,850. I can proportion it, but I don't want to proportion it. Yes, whatever way I do, my tax will become the same. 11. After this is my employment income is 27,150. Yes.
Yeah.
My saving income is 9. My total income is 36,150. But on saving income, I'm allowed 500 further rebates. Yes, further allowance. So
Yeah.
on the saving income, I'm calculating separate tax. Yes, first 500 is exempt. Yes.
Yeah.
Next
0%. Yeah.
Next 6,850. If I add it 27,150 plus 5 plus 6,850, that make my income 34,500. Because up to 34,500 we have a rate is a 20%. Yes.
Yeah. Correct.
Because I have a 9,000 income, out of 9,000, 500 is exempt. Yes.
Yeah.
6,850 I'm paying 20%. Yes. And
Yeah.
remaining
Correct.
I'm paying 40%.
Okay. Understood.
Because 34,500 plus 1,650 it become your 36,150. Yeah.
Yeah. Correct.
Okay, that's all. That's in scenario we need to calculate it, which we calculated. Yes.
Yeah. Correct. Okay. Understood.
I just put some rules as well there. Tax planning avoidance, yes, is illegal Yes, we can plan, minimize the bill. Illegal, of course, we can. Allowable, some fines are allowable, some not allowable. All this I put the rules. Yes, repairs you can, but capital expenditures you can't. You can claim allowance only. Yes.
Yeah.
Donation
Correct.
you can, if it's a small donation to the charity, you can claim. Exempt, yes, some national saving investment are exempt. Redundant salary is exempt. If you win the national lotto is exempt, you don't have to pay tax on it. Then we have a taxable income and employment income. Yes, we need to be calculate and we need to be minus and exempt. Normally the pro forma we can categorize them: non-saving income, which is employment, saving income, dividend income, even the property income. Yes, we have a different rule, different rates for each category, and normally we use the pro forma for this return purposes. Yes.
Yeah.
Then we have 104 LO1.4 assess the ethical issues arising. So we also, I think so you also learn about the 5 professional code of ethics in ACC as well.
Yeah.
Integrity mean honesty, objectivity mean yes, not bias, professional competency mean up to date knowledge, confidentiality mean always keep the current thing confidential, professional behavior always we need to keep. Yes.
Yeah.
Then if we take the gift from someone, self-interest. Yes, if I have an investment in the business, maybe I'm not and I'm an accountant, I shouldn't be involved in that. Yes, I shouldn't be accountant then for that company. Self-review is mean checking on work. Yes. Familiarity is mean if we know each other's very number of years, it can be threat. Intimidation means somebody can give me gift and can be intimidate. Yes. Advocacy mean I have to give the two people I'm looking accounts, but they are each other, they are competitor as well. Yes, it's a very difficult. Maybe I'm not giving the right advice too if they ask me to give advice. And when they are dealing, yes, that's
Yeah.
we need to be look around. And this is example of a firm is accountant recently taken provide the professional services preparing JAM's end of the year account. You early years the business turnover has exceeded the VAT return. Yes, but JAM should have to register. Should point have been charging the VAT on their services. What do you think? What JAM should inform to HMRC or should be guide to? Yes.
Yeah.
Otherwise, of course, the threshold is we said 83,000. Yes.
Yeah.
So if you want to read it, yes, taking the rule-based approach, JAM should HMRC failing, yes, to register, because if threshold reach, you should register it. If you don't, if you ignore it, you're going to compromise your professional code of ethics. Yes.
Yeah. Correct.
So that's all we need to look around. So that's your 1.4 assessment criteria. Any question?
Absolutely fine.
So today we just learn about the basic assessment criteria to pass. Yes. And in the next lesson, we'll try to be look around the merit and distinctions as well. Of course, is a compare and contrast. We can look around various other issues in details to get merit and yes,
Yeah.
or distinction. So instead of one scenario, I can use two different. Yes, I can evaluate it. Yes.
Okay. So for a distinction, you put 2-3 examples, do the calculations, and give a full report on it.
Yes. So we can look around the property income. We can look around other bitter pieces as well, not just simple calculations. Yes. And we can look around two different scenarios. Yes. It's more evaluate. Yes. Things.
Okay.
Okay. Any question? So today we'll keep up to here, and in the next lesson we'll go through our LO2, and in LO2 we'll look further, our merit and distinction criteria as well, and I'll send you some examples. Yes. And I'll upload the booklet as well, so you can go through some examples. Yes. extra
Yes.
examples to address your merit and distinction criteria. If you want to pick, few, yes, you can as well. And within assignment, we'll go through the scenarios as well.
For the assignment, for given examples, can I use examples from the F6 textbook?
Yes, we'll go through assignment brief in the next lesson. Yes.
Yeah. Okay.
So which will decide, basis are, because we need to look around the scenario. If the scenarios are given, it's fine. We need to use the scenario. If scenario not being given, then of course, we can't. I copied the link. This is called self-assessment return. Yes. This is all, how we can fill it. Yes. Boxes. How much is the profit? Yes. All the goods we purchase. So we can look around the boxes. This is actual return form from HMRC website. Yes.
Yeah.
Okay, that's all today lesson. In the next lesson, we'll go through our LO2.
Yeah. Okay.
And in the meanwhile, if you have any question, drop me email.
Yeah. Okay. Thank you.
Welcome. Have a nice weekend. Thanks. Bye-bye.
Bye bye.